Friday's moves lower on the NSE attributed to company-specific news items, and yesterday as well, the same seems to be holding true. But overall here, the market is expected to benefit from the rate cut we saw last week. What's your overall perspective on the markets and where we're headed, especially in a context where political risk is also something that needs to be factored in here?
Good morning, Alishia. I still have a bullish outlook for the Kenyan market because looking at the prices of most of the counters, they are trading at discounted values. Looking at the demand-supply curve in the market, it tends to be in favor of demand, showing there's still more interest in these stocks. And also looking at the corporate actions ahead, we have the commercial banks due to release their H2 2010 results soon. This will increase demand and liquidity in the market. Talking about political risk, we are at a time where there's a little squabble here and there about political issues. For example, we had the appointment of the judicial leaders, the Chief Justice, Attorney General, which was controversially received politically. We also have issues of inflation, which may affect the market. We have inflation pegged at 5%, which is about that 5% higher than what was recorded sometime in June last year by the central bank, which was about 3.7. So looking on, I see we have some hurdles here and there, but I still say the market is a bullish one, and I think this will be overcome.
Let's take a look then at the banking sector specifically, because we've got the banks having had a lot of good news priced into their share prices already in anticipation of positive earnings reports. To what extent is the market now pricing in even more? Because one can only assume they're set to benefit further from that rate cut that we saw last week, meaning access to cheaper funding and more likely better earnings prospects moving forward.
Yes, and I still say that there's a lot of demand for credit. There's a lot of room for retail banking in the country. We have a lot of businesses coming up. We have a lot of microfinancing institutions coming up to meet this demand. And I think looking at most of the banks, they tend to shift their management strategy to meet this demand. And I think looking at Equity Bank, it has been it's boasted one of the best in retail banking. I think they're looking to capture this. And also we've had issues of manufacturing on the rise. I think all these factors play to the favor of the banks, as there'll be a lot of demand for credit in the short term.
Well, it certainly seems like banks are the hot investment to make in Kenya this year, not just because of higher domestic growth projections, but also because of the increased exposure to regional markets as well. Equity Bank is just one of those banks that's playing in that regional space, saying that it hopes to derive at least 20% of its profits from regional operations this year. What's your view on Equity Bank right now?
I would say it's very bullish because looking at also the kind of business they have regionally, they have a business in Uganda, they moved to South Sudan, which is soon to be a new state with new prospects. They're moving to Tanzania. We've had, in June last year, we had the Common Markets Protocol ratified. All these are yet to reach true fruition, and I think Equity is looking to tap into that. Then very soon there'll be borderless commerce between Kenya, Burundi, Uganda, Tanzania, the East African states.